What's up, guys? Ghost Trades here. I'm about to drop some sassy sass for y'all. Okay, stay tuned, because this is gonna get saucy. But okay, let's hope. I'm so happy I got this mask on right now. So, just forgive my cringe. Okay, so many of y'all, I'll go through Nasdaq and gold. Many of y'all already know this concept. Well, those of y'all that are more advanced, that have done your research. Let me take you all through this concept. Accumulation, some call it a wall, some call it consolidation, accumulation, it's all the same thing, It's all the same thing. Whatever you want to call it, it's up to you. So, what is actually happening in the accumulation? Let me take this big accumulation here, just for better understanding, to help you better understand this. So in an accumulation, you'll see price always referring back to the mean. So what this means? This means as buyers push price up, sellers step in and reverse price and push it back down. As you can see, sellers revert price back to the mean. Buyers push it up, sellers reverse back to the mean. So basically this range acts as a premium and discount, where there could be buying opportunities at the bottom and selling opportunities at the top. And when you do get a breakout of this range, it's often a very volatile breakout. It's often a breakout that runs quickly in a direction until it accumulates once more. Breaks out, accumulates once more. What happens after that? You get selling opportunities at the top of the range and buying opportunities at the bottom of the range. When you get a strong volatile breakout, look what happens. These consolidations can as well be tested again. Breakout, tested, and look at that. What a sell-off. And in between here, I'm sure you can see, there's many other consolidations. A lot of people refer to it as also accumulation, manipulation, distribution, and that is actually a good way to look at it, because that is also a signature within the price. Look at the small accumulation here, for example. It accumulated, had a small manipulation to the downside, and as it returns back, this could have been your entries, go long. Same thing as in this big accumulation as well. Look at this manipulation, returns back, and then your distribution. So, and this phenomenon happens across many assets, many assets. I'd say actually it happens in all assets, because while this accumulation is happening, what a lot of people don't know is that in this accumulation, this is where all the big money actually loves to pile in their orders. Or they'll even be playing within this range, buying and selling. This is big money's favorite market phase. It's always the consolidation, because the market, 70% of the time, I'd say, the market is held in a consolidation phase. And the rest of the time, it's like, it's doing runs. It's doing runs on liquidity, it's distributing, manipulating, that's the rest, that's the 30% of the time. most of the time the market is consolidated, and that is why you should practice patience. Yeah, patience will take you a long way. Look at this gold setup. So for gold, normally I trade New York session. So look at this consolidation that happened during the London. We had a consolidation. I like to look at the market from 8 o'clock for gold, 9:30 for indices such as Nasdaq, S&P, US 30. But yeah, gold, I noticed the runs happen a little bit sooner. And yeah, look at this. You had your accumulation, had a small manipulation there. This could have been your Fibonacci retracement entry, selling at the top. Or even if you missed this, boom, gives you another opportunity. You can buy it right there. And this would have gave you a solid risk reward as well. You can play around with your stop loss. Sometimes you can put it halfway, because normally if it's really gonna run, it's not gonna come back all the way to the other end of the box. When it's time for it to run, it's just gonna tap it and it's gonna go. But to be safe, you can put your stop at the top, and you're of course, you could take your 1 to 2, 1 to 3. Your risk depends all on you and your whatever feels most comfortable for you as a trader. Let's go to another 8 o'clock. Show you this exact same setup, and it repeats over and over and over. This can be your whole model, literally. But with any model, you have to learn how to master it as well. Got your accumulation during the London. For an accumulation, I always look for it to make at least 2 equal highs or 2 equal lows, just so that I know it's playing within the range. At least 2. If you get 3, great. 4, fantastic. Look what happens at 8. 8 o'clock, accumulation, you get your manipulation, and you get your run all the way to the downside. And to look for confirmation, you can actually just look at rejections. When it leaves long wicks like this, even look at the previous example. When you get long wicks, this is showing, if you had order flow, this is basically showing you absorption. So what is happening is buyers are pushing up, sellers are absorbing them, and you're getting a rejection. In price action, they call it a rejection. In order flow, they call it an absorption. It's literally the same thing. You don't really need order flow to see what's happening within the candlesticks if you know how to read price action. But it takes time. It takes time. But as I'm saying, look at this. Manipulation, maybe you could have entered on the return into it, or you could have entered at the bottom of it. You can use fair value gaps as entry. For those of you that don't know what a fair value gap is, it's literally just a 3-candle formation. 1, 2, 3, and it leaves a small gap where there's literally no trading or no filling of the space that has taken place. So good it rhymes. But yeah, this is what I'll call a breakaway gap. Yeah, these are literally just FEGs. Could have entered on any one of these as it formed. After it formed, wait for it to return back in. But yeah, as you can see, you would have got a pretty good trade over here. Ran a perfect 1 to 2. This is an example where if you wanted a tighter stop, you got stopped out. But yeah, the safest stop loss is obviously at the top of the box. But yeah, hope you find this insightful. If you found this helpful, please leave a subscribe, like, follow, comments. Yeah, do all those things for me, please. Okay, peace out.